thank you for giving us this chance to speak with you regarding the mining sector in Zimbabwe and Caledonia in particular.
Pleasure.
Now, despite the industry-wide appeal to reduce the foreign currency export retentions, the government increased them to 30%. You are now retaining 70% from 75% in US dollars previously. So in terms of the economy, this has boosted the country's foreign currency reserves, which are now at 900 million, supporting the Zimbabwe gold, our currency, and are also helping in stabilizing inflation. But however, it is also limiting forex liquidity in terms of mining companies themselves. The industry is advocating for a reduction probably to 10%, 5%, or completely eliminate it, but the government has increased it. How is that affecting your operations?
Well, clearly we'd prefer to have a lower retention and to collect and retain more of our dollar revenues, but we're working perfectly comfortably at 30% retentions. We're finding improved liquidity in the willing buyer, willing seller market. We're able to, the 30% that we get in ZIG, we use in tax payments, we use for local procurement. So clearly it would make our lives easier if the retention was reduced, but we're operating perfectly comfortably at 30%.
So what advocacy is Caledonia pursuing to ease these mandates? How are you lobbying the government?
Well, we lobby through the Chamber of Mines. We're not lobbying the government directly. As I say, we're working quite comfortably at 30% retention, using the ZIGs for tax payments, local procurement. You know, obviously we prefer lower, but it's not something that we as a company ourselves are actively pursuing government on.
Now, with the ZIG now stable, the ZIG is stabilized, unlike the last year when it was devalued. It faced a premium of over 70%, but with money tightening, the ZIG is stabilized, only fetching a premium of below 27%. So previously, miners faced the challenges in ZIG payments, which was highly overvalued. Are you still facing challenges right now, given that the currency has stabilized?
We incurred really very big foreign exchange losses last year. I think the last one was the devaluation right at the end of September last year, and those foreign exchange losses were incurred on our ZIG receivables. So that was the money that was owed to us in respect of VAT refunds and outstanding payments for gold sales to Fidelity. So that's what triggered the foreign exchange losses. What you're talking about the premium, that means that if we're spending ZIG to buy a product locally, what you're saying is the effective see-through dollar price is higher, and that we have seen that. As you say, the margin has shrunk, and so we're not seeing any appreciable increase in our overall costs as a result of this premium. So it's become much better managed, and the ZIG stability is something we really welcome, and we really hope it continues. Because to go back to incurring foreign exchange losses at $1 million a month was making it very difficult to commit further capital into Zimbabwe. So we really do want to see continued ZIG stability, and all of our interactions with the RBZ indicate that the governor is steely in his resolve to maintain this. So from our perspective, long may that continue.
Now, economists are flagging that the ZIG is artificially stable, given that the government is not paying exporters, especially the government acknowledged not paying 690 million equivalent to PGM's exporters, giving artificial stability. How are you hedging as a business against?
We can't hedge the ZIG. There's no way of hedging the ZIG. And I can't comment. I'm not an economist. I'm just a gold miner. So we've got to take the facts as they presented to us. We're seeing ZIG stability over the last year. We'd like that to continue. A return to historic instability would make our lives much harder than it is now. So we hope it doesn't go back to that.
Now let's look still at the delays in payment.
We're seeing no pace in delayment. We're getting our ZIG payments within an acceptable period of time. No different from the payment periods that we've experienced over the last 5 years or so. I mean, nothing's really changed.
So the delays are only in other sectors,
we're
not
not seeing it.
within the gold.
I can't comment on delays in other sectors. All I can say is that we're not experiencing delays.
Now, let's look at the ease of doing business in Zimbabwe. Before the ease of doing business was discontinued in 2020 by IMF, Zimbabwe was ranked 140 out of 190. And in 2024, the United Kingdom flagged Zimbabwe as one of the countries which is very difficult in business operations. And right now, because mining is on the rise, gold prices are on the rise, what challenges are you facing in terms of tax structures in the mining industry?
Now the tax structures aren't particularly onerous. I mean, tax in Zimbabwe has been relatively stable. The Zimbabwean authorities haven't weaponized the tax regime in the way other jurisdictions have done. So tax in Zimbabwe is by no means difficult. If we've operated here since 2006, and dealing in Zimbabwe is complicated. The bureaucracy, the administration, the procedures, but it all comes down to knowing how to press the right buttons in the right order to get the right result. Okay, and we've worked here for 19 years, and we know how to do it. If you were to come into this country as a completely new entrant, you would struggle, and we know that some gold companies have come to this country attracted by the outstanding resource base, and they've struggled to do basic things because they just didn't know how to make it work. Frankly, that's played to our advantage because it means that we've had pretty much a clear field in terms of acquiring some really attractive assets here. So our position is that Zim is somewhat bureaucratically complex, but we can navigate it perfectly happily. It's not a problem for us. You just need to know what you're doing.
Okay, fine. Let's look at the power outages. According to Chamber Mines, power outages are eating up 22%, at least 22% of miners' revenues.
No, we don't experience that at all. So we put in our own solar plant, which provides about 20% of Blanket's average daily use. We built that, we operated it ourselves. We don't need to own it, so we've actually just sold it to release capital elsewhere in the business, but we still continue to get the benefit of that. We've got standby diesel gensets, which we can run if we have to, but the balance of the power comes through the grid. We're a member of the Intensive Energy User Group, which was an initiative that was established by the government, and that works relatively well. So power is imported into Zimbabwe from other countries like Zambia or Mozambique. We pay for it in dollars. It comes through the grid. The only area where we really have a bit of trouble would be the last sort of 15 kilometers or so from the 132 kV backbone, which as close as it gets to us is Gwanda. The bit that comes from Gwanda to the mine, that is quite poor quality, and we may have to invest to deal with that. But fundamentally, we're not incurring anything like 20% power outages, given the fact that we've got solar, we've got our diesel gensets, and we're getting reasonably good power through the grid. So the Zimbabwean authorities move very quickly, actually, compared to other countries, to do their best to allow well-capitalized companies like ours to come up with a solution.
Now, let's look at the mining industry as a whole. Artisanal and small-scale miners contribute over 70% of the total output, with large-scale miners lagging since 2017. What measures would you think are possible to level the playing field between large-scale miners and small-scale miners?
I think you've got to understand that large-scale gold miners can't just turn the light on and increase production. You know, we've been looking at the Bilboes asset since 2016. We bought it in 2023, so it took a long time to actually get the deal done. Having bought it in 2023, we probably won't actually start construction till 2027 because it's going to take some time to raise the money, then 2 years to build it, so 2027, 28. You can't build a gold mine overnight. It takes a long, long time, whereas the artisanals who are really just turning over the top sort of 6 feet or so, they're much more nimble in their ability to react to a higher gold price or change circumstances. We can't respond that quickly. So it takes a long time for a big gold mine to increase. It takes a relatively short time for a big gold mine to decrease. Okay, so the other it's not symmetrical. Whilst it takes a long time to increase production, it's actually relatively quick to decrease production if something goes wrong.
So my question was, are there any policies that you might advocate for to support large-scale miners?
No, we're comfortable with the current environment. The issues that we've really had come down to the technical appraisal of the project, which has got nothing to do with the government, and our ability to raise the money, which is to do with the international market, and again, has nothing to do with government. So as far as we're concerned, we're perfectly happy with the current environment, and it creates a great framework for us to invest.
Now, despite
that may not be what you want to hear in the Zimbabwe context, but we're fine. We're very happy with the current environment.
That's fine. Now, despite mining contributing over 60% of Zimbabwe's foreign currency, mining also contributes to climate change, which claimed over 60% of Zimbabwe's yields last year. What policies, what strategies are you implementing to steer up smart mining?
20% of our power comes from our own solar project, and the power that we import from Mozambique and Zambia is largely hydro. So to the extent we can minimise our use of diesels, that reduces our climate footprint quite considerably. So I would actually argue that Blanket Mine is got a relatively small carbon footprint because of our own solar plant and the imports through the IEUG, which are largely hydro.
Now let's look into the short to medium term outlook. What should people, investors, expect from Caledonia in the short to medium term?
So the short term, very short term, over the course of the next sort of year or so, Blanket will maintain stable production at anything between sort of 75 and maybe 80,000 ounces. There will be fluctuations within that range just through normal mining variances. So 75 is not bad, 80 is good. Outside that range would be extraordinary. I think what you'll then see, hopefully before the end of the year, maybe early next year, is some clarity as to where we're going on the Bilboes project. And then if we can get clarity on that quickly, 2026, raise the money to build Bilboes, and then 2 years, raise the money to build it, and then thereafter 2 years to build it. So it's going to be at least 3 years before Bilboes comes on stream. When it does come on stream, that will take our production from 80,000 ounces to about 250,000 ounces, or 2.5 tons to, I think, about 10 tons.
Probably becoming the largest gold asset in Zimbabwe.
Almost certainly, yeah.
Thank you for your time.
No, thank you very much. Thank you.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.